Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I'm leaving for Switzerland today. I'll be gone for a week, and I wanted to give you an update on all my open positions. So let's get into it. Okay, this is the short-term chart of the S&P 500, and you can see I initially had a stop here at 55.25. We broke through that. I said maintain your short position, and I put a new stop at 55.75, and we broke through that. So we got stopped out at 5,600 on Thursday, and we took a small loss. I'm guessing it's maybe 1%, 1%, 1.5% loss. We want to keep especially on the short side, you want to keep your losses small. I thought the reward to risk was really good, and at some point I'll probably be back in this position, but for now I'm going to neutral and taking my small loss. And if you did too, sorry for that. So neutral on the S&P 500. Here's crude oil, another one we got stopped out of at 70. So we ended up getting stopped out at 67.5. So we took what is that? A 4% loss on that. This was a huge symmetrical triangle with potentially really, really large upside. I am redrawing this triangle, so I am out of the position, but it would not surprise me if this is going to be the new support line instead of this blue upward sloping support line, that this is going to become the new support line. Then you have a doji star last week, which reflects indecision on this down move, and you've got really, really, really uh, the commercial traders, the smart money that are in the business, they have like just a huge long position now in oil. And so seasonality looks good for crude oil over the next several weeks. So I'm going to stay with neutral right now. What I did on this break, I sold maybe 25% of my position or 30% of my position. And now every time that it's down, I'll buy a little bit. And every time it's up, I'll sell a little bit and try to lower my cost basis. But right now, I'm neutral on crude oil. But don't be surprised if I don't get bullish again at some point here in the near future. Marathon Oil, the only oil energy stock that I've recommended. It's still holding support. Here's our stop at 25. We're at about 26. This has been one of the stalwarts of the energy group. And so here's your symmetrical triangle. It looks to me like there's a smaller triangle or consolidation happening here. So we will stay in tune to that. One of the reasons why I still like Marathon Oil versus a lot of other energy components is that it still is holding a bullish trend line on the point and figure chart where others are not. And so we're going to stay with that. And you can see if it goes down to 25 or so, it's going to break this bullish trend line, and it's going to also break our stop. And so right now, with all the potential upside and just a small amount of downside, I am sticking with Marathon Oil. Still bullish on Marathon Oil. Oops. So the gold miners ETF, GDX, uh, got bullish back in April of, actually it was more towards May when it had this retest of the breakout. You could call this a triangle, A, B, C, D, E, and then the breakout. I'm using an inverse head and shoulders pattern. It gives me a more conservative price projection, which is really still a big ways, a lot higher. I think we're at about 40 currently, and the potential upside is 50. So another 25% higher. So this is acting well. Had a big week, up 10.38%. So still like the gold miners. I like silver too. I just haven't had a chance to write about it. Hopefully I get a chance when I get back. But gold miners, bullish on, prices look higher. Fixed income went bullish back in June on fixed income. And when everybody thought rates were going higher because inflation was smoking and going higher, and so rates were going to go higher. And the chart said, no, it's not going to go higher. They're going lower, meaning as rates go down, the prices of treasuries goes up. I chose TLT, the 20-year ETF. We had a small inverse head and shoulders here that I got involved in, that I got you involved in, hopefully back in July. I'm sorry, June. And the price projection of this small pattern was 100, which we hit recently, but now it's dwarfed in a larger inverse head and shoulders pattern. And if you measure from the bottom of the head to the neckline, you project that distance upward, you come up with 115. So still it's suggesting a lot more upside, and it doesn't look like we're overbought yet. So this continues to look good to us and me. China, this has been really tedious. So downtrend was broken, these two downward sloping horizontal trend lines. I talked about the potential for an inverse head and shoulders setting up. Also, the fact that we had a five-wave up pattern, which suggested the trend was changing from down to up. And my stop is right here at approximately 25. So we're at 25.86, and the news out of China has been horrible. All the economic numbers are really, really bad. But you know what? From a market technician standpoint, when nobody else wants to own it and sentiment is really, really, really bearish, and you have some bullish chart patterns and potential chart patterns, you want to definitely take a look. And I showed you the bigger picture of the Shanghai index on previous China uh, market updates. So please refer to them. And so we're still holding above support. The upside is enormous. And so we're sticking with the China large cap ETF FXI. Then I talked about REITs. I went bullish on REITs. Nobody likes REITs. Real estate, what's real estate's not going to do well in rising interest rate environment. The chart said no, rates are going lower, and real estate investment trusts are going higher. And we had a big inverse head and shoulders pattern here that suggested 52. And we bought here at about 43, and we're up around 49. And you got to remember, this is a time that technology stocks are down the last 3 months, maybe, I don't know, 12% or something. So, while I was bearish on the market for a few days before we got stopped out, I continue to recommend parts of the sector that were acting well. Utilities, which hit our price projection, healthcare, ABBV, which hit our price projection. And now we got national retail properties. NNN is getting close to its price projection. So these things have been working in a really tough market. The other REIT that I recommended was American Homes for Rent, AMH. And this is a funny looking inverse head and shoulders pattern. I chose instead the ascending triangle, flat resistance line, upward sloping support line. And we got had a chance to buy this for several weeks, even on a little bit of pullbacks, which I did, and I kept encouraging you to. Why is it doing that? Come on, go back. Okay, so the price projection here is $46. So it still has a little bit ways to go. And, both these REITs have really good dividends. And here's my stop. I don't really have anywhere else to raise it to because this has been straight up. But again, the things that I've been suggesting have been working except for the recent short on the S&P 500 and crude oil, which I still think I will be back bullish on in the near term. But thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. A lot of these things are intraday and you will get those updates and they're actionable. Thank you and have a great rest of your weekend.